Good. All right. Hey, everybody. It's good to see you. Just a couple things before we get started. If you're joining us on YouTube or we're watching the video in the future, hi. My name's Jeff Gibby. It's good to see you. I'm glad you clicked on our video. If you do me a favor, if you like today's video, make sure to hit the like button. If you want to see more videos like it, make sure to subscribe. We're trying to get to 70,000 subscribers, and it helps a great deal. It helps us actually also get the videos out there, and I appreciate it. So if you're watching us on YouTube, make sure to hit that like. Make sure to hit that subscribe. It does help a great deal, and I'm sure there's good karma in it. Our guest today is Mark Leibovit, and I'm going to be talking about him in just a minute. If you've come to another video before, you know that I'm really, really good at reciting this legal disclaimer. So let's go ahead and do that. Today's demonstration is designed to instruct you on using Metastock and the accounting software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of any security. We're not paid for the promotion of a security. No information today or contained in this presentation should be construed as an investment advice or a solicitation to buy a security. We're not trying to get you to buy IBM or any other security. It's not the point. What we do want to do is kind of give you some good education, and I hope we achieve that. So our guest today is Mark Leibovit. Mark Leibovit was the 2019 Timer Digest Timer. Now, in order to talk to you a little bit about what that means, and he's won several times. How many times have you won, Mark?
I think it's 2.
Okay. So what Timer Digest is like if your trade, what you do is you submit your trades to them. You can correct me if I'm wrong on any of this as well, but you submit your trades to them. You say, here's what I'm buying, here's what, and they basically keep track of it, and everybody that submits their trades, one person is the Timer Digest Timer of the Year. So Mark is one of those. I remember, we haven't had Mark in for a while, but I remember one of the times that we had him, and he was pretty accurate in saying, hey, I think it's the bottom of the 2020. Yeah, he's really, really good at kind of looking at the markets and telling you what he thinks. So Mark, let's go ahead and get you started. Is there anything that you would like to add to that as an introduction?
Well, some of the old timers may remember me from Louis Rukeyser, the days that I was at ELF on that old PBS program, and
Okay.
And that was a great honor because we had some top Wall Street people. And remember one day Louis calls me and asks me if I want to be an ELF, and I say, "What's that?" And I'm sitting there with some of the big shots like Marty Zweig and Gail Dudak and all these very famous Wall Street people, and I'm sitting out in Sedona, Arizona, looking at the canyons and saying, "Gee, do I fit in this group?" But apparently he thought so. So it was a great honor for me, and it helped my career. So it was wonderful.
I'm happy to say that we can see you, we can hear you, which is a big improvement from last time, and we can see your slideshow. And so the only thing I'd really recommend that you do is kind of put it into slideshow mode so that we don't see all the borders for it. But everything looks good on our end. I'm going to get out of the way and kind of let you go for now.
Well, I'm trying to figure out how to get the borders out of the way.
Oh, if you hit slideshow, see where it says slideshow?
Hold on a second.
Down a little bit from where you're at, and the top. I know how to tell my right from my left. Where it says share over in the corner there, you see slideshow? Click on that.
Are we in good shape?
Yep, yeah, I can see the full screen. If you want to go to the next slide, just hit the arrow button or the mouse. Everything looks great.
Okay, there we go.
All right, it's all you.
Okay, so you're looking at my home screen for VR Trader, and you can see we have a bunch of newsletters and little advertisement right off the top. If you're interested in any of these, there's a promo code at the top of the screen, 2022 half off. You get 50% off of any of the newsletters on the screen. You go to vrtrader.com or LEIBOVIT VR Newsletters. The VR Forecaster is one of my big products, and we're going to talk about that more later because I promised for some insights into what my model is saying for the year. This is the annual forecast model, and what you're looking at now is what it projected for 2023 in the bar line, and the yellow line is what actually happened. We've been doing this since 1987, and it was sort of just coincidence that the time I decided to create a model because everybody wanted me to project the market into the future, and being influenced by cycle work and my volume work, we threw something together and back in 1987. I wish I could put that up now. I don't have it, but it actually called for the crash 9 months in advance, and it's been legendary ever since. Not every year is perfect, but it's a nice little pattern model that I throw together, and this again was from 2023, and of course the 2024. You're going to get a hint of that later in the presentation at the end, so I can keep your attention for at least 30 minutes. This was the Bitcoin projection that we made the beginning of 2023, and overall pattern was a rising pattern. The actual results had a little volatility, you can see, but net it did go up all year and showed an upward bias. And this was based on the same formula, using both cyclical analysis and my volume work and so forth. So I only mention this because it's a separate product we offer. It's called the VR Forecaster. If you like it, it covers a bunch of markets, everything from silver to Bitcoin to uranium to treasury bonds. And again, at the end, we'll show a couple more of these. I have a book, The Trader's Book of Volume. It's also in Chinese. It's about 500 pages of all the major volume indicators, including my volume reversal, which is that little VR you see on the top of the screen. So you can buy that at Amazon. I don't sell it directly, though. If I do have a copy and I autograph it for you in some presentation, that'd be great if I have a handy copy. Again, Timer Digest, you've heard about that. This is a little cartoon thrown together for me when I was on an Elf on the Wall Street show decades ago. I also do a radio podcast every week on housestreet.com. If you want to check in, go to housestreet.com or subscribe. I reprint that on my newsletter, and that's a Canadian-based broadcast podcast, and we cover all the markets there. I'm a bit of a contrarian, and I use a lot of tools, so we're going to go through a lot of stuff here. We're going to get into Metastock and some of the alternate things that I look at. The Creature from Jekyll Island is one of my favorite books. Every time I watch CNBC or television, everybody's talking about the Federal Reserve, and I keep saying, why aren't we abolishing the Federal Reserve? Why are we even talking about the institution, which has basically been incompetent for decades and has caused the US dollar to depreciate, I think, almost 98% since it was created back in 1913. So this book, I'm sure you've heard of it. If you haven't read it, you should read it. It's just one of the great, G. Edward Griffin wrote it. It's terrific. There's some videos you can look at. Even Mohammed El-Arian said it's getting difficult to justify an independent Fed, and some congressmen are talking about. So as easily as it was created, we could get rid of it. I think there's more of interest in doing that based on what we've seen here in the last few years. This is G. Edward Griffin, the author of that book, and there's a YouTube video there. If you make a copy of that, or you get a copy, you can watch a greater description of what he's talking about with regard to the Federal Reserve. I'm also a big follower of GATA, GATA.org, the Gold Antitrust Action Committee. I know gold's taken off here, and all the gold bugs are happy, but for 25 years, this organization has been releasing significant research about how the gold market is being manipulated by the governments, lawsuits, cases, a lot of stuff documenting it. And the reason we're probably seeing gold finally take off now is because foreign governments are accumulating it so much and they can't make delivery, and the COMEX can't do anything to mess up the price, which is what's been happening before now. A lot of shenanigans with the COMEX and shorting gold futures when there was no actual gold behind for delivery. But we have the BRIC nations wanting an independent currency away from the US dollar. So whether the manipulation is as strong now or will continue, only time will tell, but it has been going on. And we know governments, central banks all over the world are playing with gold and have for decades. Just throwing this out, something you may want to do some research on your own about. It's the year of the dragon, folks. And in China, it symbolizes power, good fortune, and strength. So just, I'm sure you're aware of it, but I always make a note of what year we're in, the Chinese New Year. Some really interesting stuff here about which of the various Chinese animals. I don't know if you follow, the Chinese, or what you are, whether you're a sheep or a monkey or a rooster or a dog, or what you are in Chinese literature. But it basically says under the dragon, some value stocks really do well, up 23% during years of a dragon. So what we're at now, and also it shows 11% for growth stocks, dividend 16, and non-dividend 11. So the year of the dragon overall, at least in the Chinese calendar, says it should be positive on a net basis. We'll get more into this with some of the other tools. A lot of bad news out there. I'm always worried about talking about an outlier event. The biggest one, of course, in our recent experience was COVID. Out of the blue, last year we had the banking crisis, but just to show you, some of the examples in the last 23, 24 years about the kind of things that come up, but yet for some reason the stock market always seems to come back even after these significant outlier events. So hold your breath. I'm sure there's another one coming at some point, and we'll just add to this list of ones that we always seem to experience. Of course, we had the war in Israel. We've got ships being attacked in the Red Sea, all kinds of outlier things, North Korea threatening, nuclear missile, on and on and on. So, you can even talk about other things, Geocosmic, which we'll get into in a moment, but that's the story. Well, the Fear and Greed Index put out by CNN last week was at the extreme greed level, and the last couple of days it pulled back to just the greed level. So just on a contrarian's point of view, it made a lot of sense that stocks like NVIDIA and SMCI and even some of the other Magnificent Seven stocks start to pull back. Too much greed in the market right now, and that's sort of my current feeling, but obviously that will change as the market goes sideways or corrects. One of the big stories in the last couple of days, folks, you've probably seen it, and I put it out all over the internet, not only me, the Barrons cover, which came out this past weekend, says bet on the bull. I remember other instances, I had a whole slide presentation about how fading the financial press in terms of the inverse of what's really happening comes to pass. Remember, I think it was March 30th or March 5th, 2020, year 2000, not 2020, was right at the NASDAQ top, going back 23 years. I remember that cover story. I think it was also on Barron's at the time. So this is a warning. And Barron's and other financial publications are good at being emotional at highs and bearish at bottoms. January barometer, however, this is my good friend Yale Hirsch's indicator. If you're not familiar with it, you should be. His son Jeff Hirsch has taken over the business, but Yale and I were very good friends. He passed away a few years ago. He put me on the cover of his 1987 Stock Traders Almanac called me a new prognosticator, which was a great honor because the Stock Traders Almanac was the first book on the stock market I ever read when I was in college. So the master sort of gave the student a lot of credibility with that little acknowledgement way, what seems decades ago, but that's what it was. But as the first 5 days are up or the month is up, that's usually a leading indicator for the year. So the first 5 days were a little tad negative this year, but for the month it was up. So I guess you give the January barometer the credit that for the net for the year, the market should be up based on that early warning system that Yale had created. And according to this, this is just a little statistical chart showing you about how January up and down reflects the market. You can look at this in more detail if you get a copy of the presentation. But there is some power to the fact that what happens in January, does affect the year, and there's some historical precedent for it having to do when Congress started session, or there were some legislation changes decades ago that there's a cause why this actually happens. And in a future presentation, I do have a little description of the congressional actions that somehow been related to the January barometer, but there was a change, I believe, when Congress started sessions, and that had something to do with it. Super Bowl indicators negative. You've got the Kansas City Chiefs winning. That's the old AFC team. And again, it's just statistics. There's some work, some don't. This one has a sort of 50, 60% reliability level. But if the AFC team wins, that's bearish for the market. The old NFC group wins, then it's bullish. So far, 2 years in a row, you got the AFC winners. But you see the market still tended to rally, even though it had its down moments. So it's an arcane indicator, but we always keep an eye on it. Presidential performance has a lot to do with it. We are in the 4th year, and needless to say, there could be some pressure here with regard to the current president, and with a rally, and the 4-year cycle low is due at any time. Some say it already occurred. It could occur now between now and September, and usually you get a rally after that. So watching the present 4-year cycle is always important. So before I get to some other indicators and some of our forecasts, we're going to look at Metastock. I do have my VR toolkit on Metastock. Jeff Gibby and the group were so kind to come to me back in, I think it was 2011, and we set this up, and we have my only place you can get it, folks. My little volume reversal, which is a trademark tool, is on Metastock, and I'm going to show you some examples. We have 3 versions of it. We're going to emphasize mostly one here for these presentation purposes because of time, but I created 3 versions of the VR. One's called the sequential, one's called directional, and one's called 2-day. So just a little skeleton chart here. We're going to go into some real charts in just a few moments, but basically, if I get a VR, you see a little VR on the screen, and a negative one, you see a negative one, and this posts all the little volume reversals. So what is a volume reversal? A volume reversal is a change of price and a change of direction, and a change of volume. So if you're getting increasing volume off of a bottom or of a top, you get a volume reversal, negative off a top, positive off a bottom. It could be in the middle of a chart, as you can see here. It could be later in the move. But as a floor trader, and I should mention, I used to be a market maker on the CBOE many decades ago, volume was very important, and that sort of triggered the creation of the volume reversal. So the theory that volume precedes price is big importance to me. And you'll see in some examples now how I trade using this tool almost exclusively. And you're used to using your own indicators and relying on your own stuff. So you got to be prepared. Volume reversal. All right. So let's go look here. This is Disney. Let's see. I'm going to go back here. I went too fast. All right. So for the purpose of the presentation, I'm going to show the 3 versions here just for one stock. So you can see I can translate a little of the Chinese here, a little bit, so to speak. You're looking at a Disney daily chart. And what are you looking at? You're looking at a bar chart. I don't use candlesticks for the VR. And the little negative VRs are sell signals, and the little blue or green positive VRs are up signals. And these are like trading tools for me. I also tie them in with a 355 stochastic. That's how I generally trade. If I have a positive VR and I have an uprising 355 stochastic, I'm more likely to take the trade. Let's go back over here. This is going back in November. We have a negative VR in Disney. The stochastic is moving down, and that gives me credibility in terms of momentum and in terms of volume and price. So over the years, this is how I trade, and I trade day to day. So if I get a positive VR here, generally we get a follow through for a day or two or more, even more significantly, many days. And I use this as a trading tool, and you can also use it on a 60-minute basis, a 5-minute basis. A lot of my clients have intraday charts and do that. I generally look at the daily chart for that purpose. So this is the sequential version. Now we created the directional 2-day version. This is the version based on the theory that when you get a volume reversal, you tend to get movement in the direction of the volume for a couple days. So we figured let's throw together and put together a tool for that purpose. And as a general rule, I guess I'll just focus on this little one here I'm circling now. If you get a negative VR 2-day platform, will say in 2 days, get out. Now, it doesn't mean you have to get out. It just it follows the 2-day rule. So negative VR here, 2 days later, you had a profit, got out. It did continue further, but it's a 2-day indicator. So that, again, it was created for that purpose. Coming more recently at a VR here about 10, 12 days ago, 2 days later, a little higher, and it just said get out, but it would told you to get out anyway. It's based on the 2-day theory. The directional is a same thing as the sequential, except it filters out repetitive volume reversals. So on this particular chart, we're looking at a weekly of Disney. And I guess it's best to go back to this particular, this going back here, back to 2021. It's a weekly chart, but we have a negative VR, and there were no other VRs during this entire period until a positive VR came in here. I think it was in the second quarter of 2022. And here we're going back to the third quarter of 2021. So based on a directional version of my VR platform, since there were no intervening VRs, you just had one indicator through that entire period, and it was pretty impressive, considering the time frame. Going way back here, going back to 2020, I get a VR, and there's no other VRs during this entire period until a negative VR came in, months later. So it just filters out repetitive VRs, and on a big trend basis, particularly on weekly charts, there's a very high level of reliability using that. But I like to look at the daily charts personally because I tend to trade much short term. So again, you have the directional, the 2-day, and the sequential versions, which are on Metastock, on our software. And again, my own personal preference is the sequential, which is the daily. Also, when you touch on this is not a live chart, but when you touch on the signal, like the negative VR, a little screen pops up and says go short. Or, a positive VR, a little screen pops up and says go buy. Or on the 2-day version, the little blue marker here will actually say it's 2 days, get out, folks. That's it. So there's little messages that pop up when you actually click on the VRs, or the little signals here on the screen as you work through the trade. So what I'm showing now are stocks that I like, as also just to demonstrate the VR itself. So Occidental has been one of my big favorites, and of course Warren Buffett, having taken a huge position and continuing to accumulate, has been a big plus for me. So I virtually trade the stock every few days, particularly when I see little trading signals here, little positive VRs just recently, and I try not to short the stock even on a negative VR, because I know Warren's out there accumulating the company stock. So, but it is one of my favorites, and there is some nice reliability on the signals. Negative VR here and a drop for several days, positive VR here, a rally for a couple of weeks, and so forth. So I tend to pay a lot of attention to the VRs, but I'm also watching the stochastic to see if we're overbought or oversold. And the moving averages I really haven't described to you, but the green is your 200-day, and I have the 50 is in the blue, and I have the 20 in the red. So I just put these up for points of reference, particularly since so many traders key on particularly that 50-day moving average. U.S. Steel. This is really interesting because for those of you following the news, the stock got really nailed today, and let me pull up I think I have the weekly on it. Yes, that's what I wanted to show you. So about 3-4 weeks ago, we got a negative VR on the sequential chart for U.S. Steel. And I don't have the chart updated for today, but now the stock today got down to about 39.40 range. And that negative VR said, watch out, there's something going on here. And it turned out, there's more news today. I think President Biden was going to talk about why the U.S. Steel Nippon merger is not good for the country and so forth. But I was playing the stock and trading the stock when I got this negative VR. We sold it, figuring maybe A, it's going to fill this gap here, which I think it did today, and B, there might be some news coincident with that. So worked out pretty well for U.S. Steel. Now I'm getting more bullish, particularly since they knocked the stock down, and we don't know if they're going to stop the deal or not. I think the Prime Minister of Japan is supposed to meet with President Biden, so maybe they'll change their mind. We'll see. First Solar is one of my favorite stocks. I trade it all the time. Why? Because I have a lot of reliability with the signals. When I get a positive VR like here just recently in the last 10 days, you tend to get a nice upward move. And even if you're only trading for a couple of days, you get a nice push. And back here a few weeks ago, a couple negative VRs, and you have a slide to the downside. Again, I tie this in with the stochastic. So it's just a good trading stock. It's down from the mid 200s. And solar is still, one of the top levels of investment interest. So, yeah, but that's just one of my favorites over the years. I'm based here in the Phoenix area, and in Tempe, which is where the university, Arizona State University, is located. That's the headquarters for First Solar. So I always drive by their headquarters down there in Tempe. In any event, they're one of the biggest on earth in terms of the solar industry. This is a weekly chart on First Solar using the sequential indicator. And you can see some nice correlation there for follow through for a week or two following some of the signals. Let's move on to another one. Tesla. Well, if you look at Tesla daily, we had a nice negative VR here about 4 or 5 days ago, and the stock has been moving lower. Of course, there's been companies and brokerages that are downgrading the stock, but over time, it's been a great trading stock on signals. When it was moving up here, a positive VR, then it gaps up, and then another positive VR, and it gaps up. So when volume is coming in, it tends to follow through in that direction. So just recently, the negative volume here, gapped down. And then, of course, this one we saw here just in the last few days, I think it was maybe last week, negative VR. A lot of it's news related, of course, but I'm not looking at news. I'm looking at the charts because volume precedes price. And if I have a signal, of course, I'll look at the news, but the chart first, because that tells me smart money is acting in the marketplace. So you want to pay attention to that. This is the weekly chart, and I don't know if I just daily. There's a daily, and this is the weekly. Okay, so you get a little bigger sense here of the signals. On the weekly chart, we've had a negative VR here about 10 weeks ago in Tesla. So the weekly chart gave you a little bigger picture perspective. Before that, about 10 weeks before that, you had a positive VR on the weekly chart, and you rallied for about 10 weeks. So, again, using the VR in different time frames is recommended. When I do a trade, I'll pull up a Tesla daily, weekly, look at the directional or the sequential together, and try to get a sense of where the volume is moving in the stock. And obviously, all looking at the momentum as well. But it's been a great tool for me here these last several decades in terms of keeping me intellectually honest. In other words, if the volume comes in here, there's buyers. There's more buyers than sellers, and I have to pay attention to it. You may use other indicators to tie in with this, and I would encourage you to do so. Not only just just look at other tools out there. There's so many out there. Moving averages and relative strength and everything else. But as you can see, my screen is relatively clean. I don't have a lot of stuff up here. It's my volume reversal. I got 2 or 3 moving averages. I have my stochastic and some volume on the bottom. And this is all I really trade with. I don't have 50 indicators up there. There's so many great presentations made here at a stock with so many indicators out there and so many great analysts. But I just stick with what works for me because it's my tool. I'm familiar with it. And I think for you guys, it's a great addition to your repertoire of indicators. Let's move on here. We'll have to talk about NVIDIA. Everybody talks about it every day. As you know, we had the big key reversal pattern on heavy volume, and the stock came down. And it looks like it topped out for a while, but so far it hasn't broken any of the major moving averages. And everybody's so bullish on it. I'm not in the stock. I haven't traded. It's too expensive for me. If you look at the 20-day moving average, or just under 800, we didn't quite get there. Maybe we'll go test that before it turns up. I know it broke and rallied back up again today a little bit, but there's still a key reversal pattern. That's negative. So my thought is it's probably a little more downside pressure coming in the stock. But that's sort of my view. On the other hand, prior to that, we had positive VRs on the way up. We had one negative here, which was incorrect. But for the most part, I have to pay attention to that key reversal pattern short term. This is the weekly chart. So if you look at the weekly chart, it's interesting. Positive VRs, going back here into December, January on the weekly. And here we are up. Now on the weekly chart, we haven't generated a negative VR yet or a key reversal, or we saw it on the daily chart. So it's sort of interesting, but you can fine tune it here. The weekly, you had negative VR drop for a week or two, negative VR drop for a week or so, then a positive came in. So you got to pay attention to all the signals. So if you look at the weekly, I personally think the stock too extended and needs to revert to the mean a bit, which is much lower. But according to this chart, volume hasn't reversed on the weekly yet. So let's see how it all pans out here by the end of this week and next week. Okay, so this is marijuana. This is the MSOS. It's actually a great little trading stock. I actually traded some of it today. This represents the Canadian, not non-Canadian, U.S. cannabis-based stocks. And this little bugger was up in, doesn't show here unless I have it on my next chart, daily. Let's see if I have a weekly on it. No, go back here. I went the wrong way here on the charts. Let's see here. What am I doing here? I'm hitting the wrong buttons. I'm going. This is what's coming up later in the presentation, folks. I'm sorry. I hit the wrong button on the screen, Jeff. I apologize. Okay, so this is the daily sequential on MSOS. So this is again the U.S.-based cannabis stocks, and this stock's down from, I believe in the 50s, and there's been a lot of talk now about rescheduling marijuana from Schedule 1 down to 3, and even Joe Biden in his State of the Union address had referred to perhaps changing the scheduling for marijuana. And there's a lot of trading opportunities here. I mean, some of the key stocks here are money-making companies. So this is not like just the Canadian names like Telray and others that got murdered. So this one came off of a little bottom today. That was yesterday, and today it started to move up a bit. Any news comes out on this thing could be explosive. I think it's headed doubling in price. It's one of my favorites. I trade it all the time, but I try to keep a little core long position in it just because it's down and there's news perhaps behind it. And again, the companies it represents are money-making companies. These are not losing companies. So I know it's out of favor, but so is Bitcoin, and it came into favor. So you can't discount there could be further action here. Let's move on to gold. This is the weekly sequential chart on gold. Again, volume reversals in there. You could see here negative VR, down for 2 or 3 weeks, positive VR, back up again. Of course, we had this big surge here. Personally, I think it's a little overbought here, but we have some good correlation here on the charts. VR here, back up, VR up, negative VR down, negative VR down, negative VR only down for a week. So this is the weekly SGOL. SGOL, if you're not familiar with, is the physical gold ETF, unlike the GLD that I guess most of you are more familiar with. This is the daily version of SGOL. Obviously less liquid than GLD, but I do trade it. Great correlation here on the charts. VR here before the big up move. We had some nice trades to the downside here on the negative VRs as well. But again, I try to tie them in with the stochastic. So would I buy SGOL here? No, it's got a gap. It's a little too high for me. Then again, I don't have a negative VR, but I did take some profits. So just letting you know there. Well, we all know what GBTC is all about. I mean, this is the Bitcoin Trust, and some really great trading signals here. I don't know if I have a daily and a weekly. Yeah, I have both. So let's start with the daily. So, obviously before the surge here in the last week or so, 1, 2 positive VRs here, even one 2 days ago, and it did continue higher. VR way back here, VR way back here. Then it had a couple of negatives back here, a couple months, back for a little bit of a trade to the downside. But for the most part, the VRs are giving us some nice signals. So what am I concerned about as a trader? Well, we got some gaps in the charts here, and we're, I think, awfully extended, even though we're into new highs. So as a trader, I took some profits, and we'll see if we get a little setback. I'm not going short, but we'll see how it unfolds here on the weekly chart. Well, this is history. I mean, talk about a sequential chart working where it filters out all any other VRs. Look at the VR we got here. You just a couple months back here, and the only one for this whole move up that we've had. And prior to that, there's a little VR there as well. So we're going, obviously going back to last summer with these signals or fall, but you did get weekly VRs on the sequential chart, which is really interesting. And way before that, going back, looking over a year back or so, negative VRs when it was coming down. So very good reliability here. Again, listen, you don't have to sell me. I'm the one who, created the indicator or been using it. The VR is my tool. So when I get it, I respect it. My only problem is staying power. Do you stay with the trade, or do you trade a day to day? Do you take the 2-day trade? And this is your own trading, inkling disposition, how you like to trade the market. Another one of my favorite stocks, Costco. I shop there just about every couple of days. Many of you probably do as well. But on the daily charts, great trading signals. It's very expensive. You talk about a $700 stock, but you can trade the odd lots, I suppose, if you like. But again, just showing you the example of the chart here. We did get a negative VR here. That's the day before yesterday, and it's trading in this little channel now here and back and forth next to the 20-day moving average. Stochastic is down. I would think it would still go lower, and I would wait for a positive VR before getting back in it again. But way extended, big move. It's not an NVIDIA, but you got a 50-day moving average down here in the mid. I would say it was at the mid 700s or so. So it certainly could, the low 700s, and got to about 7, 10, 11 the other day. So I guess you can say it tested the 50-day here. Positive VR for another trade, but one of my favorites. This is the weekly chart on Costco. On the weekly chart, 7, 8 weeks ago, nice positive VR. I had a negative VR in the week prior, and this may raise the question about what do you do in this situation? Will I immediately, stop out or reverse my position if something like this happens? I'm in a weekly position in Costco, and I get a negative VR and it reverses. Either I stop out or reverse. So you have to, make a judgment call as a trader at that point. But as a general rule, I don't just stick with a signal, and that becomes a stop issue for me if we do get a reversal on a signal. Again, this is the weekly chart. USO, well, we know what's happening. Oil's moving up. Everybody was pretty bearish on oil, and it's starting to uptick a bit, whether there's some news coming or not. But some of the stocks are doing really well. I'm trading today. If you're following the market, many of the big oil companies are up. This is the weekly chart. So to go ahead, Oxy, we talked about on the weekly and the daily. This is Warren Buffett's play. Really, I'm really partial to Oxy, and both on a charting basis and Warren Buffett's involvement. This has actually been my favorite on a personal trading basis. Is Pioneer Gas. They're in a deal with Exxon, and the chart looks to me like it's going back into the mid 50s, which is up in here. And I've been actually traded it today a couple times, but mainly because we had this positive VR 3-4 days ago. There's a deal brewing out there, and it's one of my favorite trading stocks. It's also a pretty nice dividend, but once Exxon takes it over, adios for PXD. Weekly chart on PXD, stochastic moving up. Last positive VR 3-4 weeks ago, and it was up again today, I think about 3 points. If I'm guessing right, it may test this high here over to the left, but I'm circling here and get way back up there. Maybe where the deal is on the merger. So anyway, it's one of my favorites, oils. I'm particularly biased when I get those positive VR signals. This is a chart of the daily sequential for the total stock market index. Many of you don't trade this or follow it, looking at the other indices, but this is something I like to follow because it's so inclusive of so many names. And this is your daily chart, and it's interesting. We had a key reversal pattern here a couple of days ago, so that's a little negative. But for the most part, as you can see, it was very trend oriented here in terms of positive volume going up, negative going down, positive going up, negative for only for a week. Then it went neutral here. This is looking at just about all the stocks, the total stock market index, and it's always good to take a look at this to see what's happening in terms of volume and what all stocks are doing now, what just NASDAQ is doing or what the Russell is doing and so forth. I don't know if I have a Russell chart here now, and I do. Okay, that was the next one I did want to mention, since there's a lot of talk about catch up in the Russell, and I don't disagree with that. And again, some really nice trading signals here in the Russell. This is your daily IWM chart, and it's been working out really great in terms of follow through. I'm just starting at this point here, VR running up, VR running up, VR running up. If you take the 2-day or you're trading, then you're out, really quick on these trades. But some like this negative VR gave you a 3-4 day move. So where are we now? Well, we had this little key reversal pattern. So I'd be a little cautious on IWM as I am on the overall market here, short term anyway. So I think that's something you want to pay attention to. This is the weekly on IWM using the sequential. Some really nice signals here. This cleans out a lot of the noise if you're not looking at the screens every day or every minute like I have. Here's a positive VR weeks and weeks back. It runs for several weeks. Negative VR drops for 2 or 3 weeks. Positive VR, and then we have this move in the last few weeks. So the weekly signal is something, like I say, I look at the daily and weekly signals before I take a trade to get a sense of where we are in the move. But it's a great tool for the IWM as well. Now we're going to branch off a little bit to the Geocosmic, and for those of you less interested in charting, you may not want to pay attention to this, but this is something that has also influenced me quite a bit in recent years. Solar flares, for example, can affect our technology and our market. There's radio blackout just recently, and I don't know if you know your history regarding solar flares and what could happen to the planet. This is part of the alternate stuff that I look at. There was an event called the Carrington event in the mid-1800s and just wiped out the Western telegraph, the telegraph system. And there's been a surge in solar activity. And there's something, we look at. We go to this website, solarweather.com, and they talk about geomagnetic storms and things that could be occurring here on the planet. So I watch this kind of stuff, and I can't change it, but it's something that could obviously affect all of us and the markets. There's something else you should be watching out for here in terms of the alternate or geocosmic on April 8th this year. There's a big solar eclipse that crosses right through the United States. There's some correlation to a previous time when this happened, when there was a lot of natural disasters and other events, flooding and earthquakes and so forth in the North American continent. So it should be interesting to see what happens in this April time frame. It may also be coincident with weakness in the markets. NASA sending shipped asteroid worth 70 times more than our global economy. There's people laugh when I talk about gold could be depressed if we start mining gold on asteroids. Well, this is the talk, and whether it's in the short-term horizon or not, but this is what's coming. I track all the volcanic activity on the planet here. We put in a newsletter every day for those who are interested in tracking this. I don't know if you're aware or not, but there's 40 to 50 continuous active volcanoes on the planet right now, and something could change really quickly, folks, as we've seen when some of these blow off, and we're all sort of joking about the Yellowstone supervolcano. If that ever went, that's it in terms of North America, but something we watch. Now, moving more on the short term, you may not think I'm serious, but I am. Since 1970s, I track the lunar positions of the moon, and when I was watching, actually should be my favorite show, Wall Street Week with Louis Rukeyser, back, I think it was in 1972, Ian McAvity was a guest on the show. He produced a newsletter at that time called The Deliberations. He passed away a few years ago, and he said on that television show, national television, that he looks at full moons as coincident with a move in gold, and you get highs around full moons. So they didn't invite him back on the show and whatever, but I start tracking lunar cycles ever since then. And if you do and pay attention, you'll see that there are correlations within a couple of days with the new moon and the full moon, with peaks and troughs in the markets. And if you plot them out as I do, there's a full moon coming up here on the 25th. They call it the worm moon. Will it be a low in the market or high? I would pay attention. March 10th was coincident, with a little high point in the market. So I watched the lunar cycles too, and I was influenced by Eon's work and also this is part of my forecasting tools in terms of cyclical analysis as well. Actually, there's a chart you can pull up on spaceweather.com on Earth asteroids that are being tracked. And this is something that you also need to pay attention to. I'm very tuned to the seasonal patterns. The March vernal equinox is coming up here in the 2021. I don't know if you recall, but there are times where we see big lows around the vernal equinox. The classic example was during the COVID crash, which was right in tune almost precisely with the vernal equinox. But I also watched the summer solstice in June, the September autumnal equinox, and the winter solstice. And you got to watch the markets around these time frames, give or take a week or so. There's often changes in direction in the markets around the seasonal patterns. So, tying in the lunar cycle with this and your volume work, sometimes you get a better sense. And one of the reasons I'm a little concerned about the market now, besides the key reversal in NVIDIA and some of the action of some of the Magnificent Seven stocks here, and the fact that we're also, everybody is overly optimistic, is this cycle coming up. So one of the things we pay attention to. I also look at Groundhog Day. Every year on February 2nd, I did a study on this years ago. There tends to be weakness 2 weeks either side of Groundhog Day. So that's February 2nd. So that's a time frame that if you're trading, you got to be aware of that cycle that comes in, unrelated maybe to the groundhog, but it's the same day as the groundhog. So let's look at the VR forecaster here again. I promised a couple insights here, what was going on based on our model. And again, you can buy the full model on our website by using our promo code. So this is where I am right now on Bitcoin for 2024. And remember I showed you earlier in the broadcast how the 2023 model really worked out. Now this is the only forecast up to the middle part of the year, but it says we're in a strong period right now, as obviously is the case. Remember I published this in January, but according to the model, though, however, if we get into May, we're going to peak out. And then we're going to have a sell-off. That whether this continues the rest of the year, that's posted on my research and my website. So you'll see that as the year unfolds. But right now we're in an uptrend in Bitcoin. But I'd be looking for a blow-off peak here. Now sometimes no model is perfect, and we could be in a blow-off right here. But according to this, it's closer to the mid-May period for a top in Bitcoin. And a top in Bitcoin could be quite dramatic. We can see big numbers to the downside. So if it gets to 80,000, it could be back to 50,000. So something to pay attention to. Again, this is my VR forecaster view at Bitcoin. This is my crude oil model for 2024. We're actually in a time frame now for a rally and possibly a peak. And I am bullish on the oils, as I showed you a moment ago, but we're still in this little rally phase, and it could end, right here, according to the model here in the March period. So the action we're seeing in the oils now, though the rest of the year it says we're going to come back, it says we might be hitting a little trading peak here during this month. So just pay attention to that. And if we do get a shakeout, I would be a buyer again in the oils based on this model. And finally, this is a Dow Industrials, not for the whole year, but I had to give you some insight of what I'm looking at. And basically, it's bearish now into March, possibly into April. So that tied with the vernal equinox pattern that I just showed you a few moments ago is telling me if you go, you shouldn't be, extremely bullish right now. But if you get a low here between now and April, or maybe it's tied to the solar eclipse that I just showed you a few moments ago around April 8th. That would probably be a buy point for another move higher. But then after that, in the summer, we're going to see another sell-off, come down into July, according to this model. So it's going to be quite volatile here in the months ahead, despite the overall bullish sentiment and the election. So at the moment, that's sort of where I'm reading it. It's like anything else. When the weatherman makes a forecast, you always look out the window. You know what I mean? Look at your short-term indicators. Look at your your volume reversal, look at your stochastics, look at the news, look at sentiment, and put it all together. So you don't go blindly on one tool like the one I'm showing you here, though this has been influential and has had some accuracy over the years. With negative action now in the market, and I'm long the inverse ETFs here, tells me that I'm probably right. And then there'll probably be a buy point coming up here and a reversal, sometime between now and early April, and we'll take it from there. So this is a little teaser on my annual forecast model, but if you want the full model and all the others, please go to our website. And again, you can use that promo code 2022 half off. And Jeff, we did 50 minutes, and I think we did good on the timing.
Great. We had a question about kind of the January barometer, and I kind of answered it in the chat. It was, but I thought this was interesting. I found an article from Fidelity, and they looked at every year since 1945, and they said that the January barometer has held true roughly 75% of the time. So 75 years out of 100 since the 1945s. They go on to say, during 2 years since 1945, have dropped more than 10% for the full calendar year after having a positive January. So I thought that was kind of interesting. I actually shared the link in the chat earlier.
You got to give Yale Hirsch credit for that. I think it was in 1972 or 4. He came out with his January barometer report. He actually created it, and it's noteworthy because of Yale's work. So yeah, I mean, it is something like anything else. It's a tool. You have to take a look at it and put it into your quivers of market analysis and decide what works for you. But it does have a high reliability. So it had a little mixed reading this year with the first 5 days down, but we'll see.
The other thing that I totally agree with you on, without question, without hesitation, is Costco is a great store.
Okay. I'm there. I think it's up because I spend so much money there, right?
Yeah. It had that little dip the last couple of days because you missed your weekly visit, right?
Yeah, I wasn't there that day. You're right, and it dropped.
Well, Mark, I want to thank you for coming in and spending some time with us. That was really, really good. We do have, as you said, the add-on. I'm going to talk a little bit more about how people can get the add-on. Before I kind of take over and that kind of stuff, I do want to say thank you for coming in here, being part of it.
It's an honor and a pleasure. You're a good friend, and we go back to, where do we go now? About 15 years. Thank you so much.
Yeah, of course. We'll have you again really soon. Thanks for coming.
Take care.
All
Thank you, everybody.
Now, before we go, though, Mark did talk about the add-on that he's got. And what I'm going to do here is just kind of take the control real quick. And we have a little bit of a special offer. As we had said, Mark's a top market timer. His VR toolkit includes the 2-day, 3 systems that are based on his volume reversal analysis. You've got the VR 2-day, the directional, and the sequential. And the normal price for that, pretty inexpensive add-on, really, $99 a month. The offer that we're going to do today is if you buy a month, we'll give you the second and third month for free. So if you want to try it out, want to play with it, take a look at it. For $99, you'll get it till June. And if you like it, if it's helpful, you'll keep it, right? So basically, your per month cost would be $33 a month. So $99 a month will get that for you. That'll get you actually 3 months. You can evaluate it till June 13th. To order, give us a call, 800-882-3040 or metastock.com/saleschat. Mohammed asked a question that I think is a very good question, Mohammed. Mohammed wants to know, is it possible to scan for these volume signals on Metastock? And I don't know if you know this, Mohammed, but I think the scanner that we've got in Metastock is the most useful thing for me anyway. I've been using Metastock for 27, 28 years. I love it. But one of the things I do is scanning every day. And so if you're looking to be able to scan for these volume reversal signals in the marketplace, whether you're here internationally in any of the 300 different exchanges, or whether you want to do it on stocks or futures or Forex, absolutely you can scan for volume. So Thank you for asking that question, Mohammed. I actually think the tool that we have for scanning is one of the best in the industry. I might be a little biased though, but I use it every day. It's how I identify those stocks. So thank you for that question. All right, 800-882-3040 or www.metastock.com/sales chat. Thanks for coming, everybody. Market, thank you again for kind of coming and spending some time with us. It was good to have you. If you're watching us on YouTube, like and subscribe. Helps a great deal. Give this a go. 800-882-3040. Thanks, everybody. See you next time.